Hey, it's Sully, and this is episode 466 of the Orange Pill Investor. What's up, Stir Fry? What's up, Dude Face? Um, of course, that was just a nice little troll intro for all of the revised guidance hate that I've been seeing on X. And I'll talk about that real quick, but that's not what the title's about. The title's about something a little different. And just a quick note, really didn't get to talk uh, anti Ponzi FUD on the call last night. I think somebody, if you were playing a drinking game and the key word was Ponzi, I think maybe that one only came up once. So I had some kind of thoughts on the subject, but there's this little conversation, and Preston Pish is on it, and there was a little bit. So I thought this was the most reasonable Ponzi FUD. And Logpilot said that it's not a Ponzi until the structure closes the loop. The critical moment comes if strategy trades at a discount to NAV and management issues new preferred to buy back common, while funding preferred dividends through ATM common sales. At that point, the cycle looks as follows. 1, issue preferred to purchase Bitcoin. 2, use ATM common to fund the preferreds. Then when MNAV is less than 1, issue new preferred to replace common, issue ATM common again to pay the preferred dividends, return to step 3. The circular funding means existing investor obligations are satisfied only through continual inflows from new investors with no underlying operating cash flow or realized Bitcoin proceeds. And this is probably a key term. And so I'm not a lawyer. And with the way that they were suing the fuck out of Tesla to basically unfairly rip Elon off of his well-deserved payment plan. What was it? Profit sharing? Anyway, whatever the hell it is. He only gets paid if he meets a bunch of very hard to accomplish goals. And so there's some activist judges out there that might entertain something like this. So what is the likelihood that they get sued? Probably pretty high. Not because I think it holds any merit, but it's just the way that the legal system kind of is trending. Delaware may learn their lesson because I think companies are exiting the state at a high rate because of that shitty lawsuit. I actually, before the vote, I actually converted my leaps into shares so that I would be able to vote and make sure that I could vote for Elon's incentive package. So there's some Elon D riders out there that are willing to to really stick with it. Maybe there's people talk about Bitcoin and strategy being a cult, but there's some Tesla fanboys out there that are probably approaching cult status as well. And my response to that was, what about the ability to unclose the loop by halting dividend payments to STRD? In that case, now Stride ATM is used to purchase MSTR in under one MNAV, but not obligated to sell MSTR ATM to pay the STRD dividends. This is the risk that Stride holders understand and willingly take on for a higher yield. So I think one of the first elements of maybe it's not in the legal definition, I'm not really sure, but in my mind, one of the first requirements of a Ponzi is that it has to be deception, right? If at first there has to be some deceptive practice that is going on. Like, people don't know that they're being paid out from future investors. But STR holders understand that in the event that Strategy would have to do that if they can't afford to pay the STR dividends, they can suspend them. So I think that whether they ever have to unclose that loop or not, the threat of it, I think, at least gives them some argument in court of like, hey, look, STRD holders want a higher yield. They're willing to accept higher risk for a higher yield. And that's basically the agreement from the very beginning. So no one should be able to go to court and testify that they were unaware that this is the risk that they were taking. Right? It's all above board. There's no secrets going on here. And I think it might be the final thing that I would say about it is, if this would be considered a Ponzi, then all forms of ATM would be considered a Ponzi, because you are diluting the shareholders for a promise that you're going to take the money that you raised through the ATM and create value with it. And that's the reason why, before Strategy started implementing dilutive accretion, I know we're just supposed to call it accretion, but in this context, you're going to have to forgive me. But that was the reason why Strategy shareholders didn't give a fuck about the dilution, because not only did we, normally you'd sell a common ATM, okay, let's go build a factory. And then in the future, maybe we'll produce more things and there'll be a return that shareholders receive. But that's just a promise of potential. What if nobody wants to buy that shit that's rolling off the assembly line? But the reason why Strategy holders didn't give a shit about the dilution is because they were immediately buying something that was 100% guaranteed to deliver value in the mind of a Bitcoiner. If you're a Bitcoiner, you've already determined that Bitcoin is going up forever. Maybe on a cycle, maybe it goes up, maybe it goes down. But if you zoom out far enough, it's up forever. It's up and to the right. And so that's why MSTR holders not only didn't care about the dilution, they embraced the dilution, because they were getting an immediate return on the expectation of future value. And so I think it would be very difficult to find a truthful person to testify in court that they were investing in the preferreds or that they were investing in Strategy and didn't believe in Bitcoin. And if they did raise their hand and swear that that was the case, then they should just be ridiculed and laughed at, because that's central to the thesis. And I kind of look at it a little bit as a pairs trade. So the preferreds and Bitcoin and Strategy should all be positively correlated. And if the values of those two things, the preferreds and Strategy, diverge, then it only makes sense that you would sell the overvalued one and buy the undervalued one. And that's really what this just seems like to me. This is just a pairs trade, and I'm completely unbothered by it. If Strategy gets overvalued, you sell the common ATM, you buy Bitcoin, you fund the dividend payments on the preferreds. If MSTR goes under 1 MNAV, then the pendulum has swung in the other direction. You sell the ATM on the preferreds, and instead of buying Bitcoin, you can get more shareholder value by buying the stock buybacks. I kind of see where they're going, and from the way that they discussed it, maybe Logpilot is an actual lawyer. So, like I said, it would not surprise me at all if they do, if they do get sued. But there's a lot of predatory lawsuits, and they will try to make this case, I would assume, at some point. If I was on the jury, I'd be like, well, I don't even think they do jury trials for this type of shit. Maybe they do. I don't fucking know. But, if it was up to me, I'd be like, no, this is fine, because I think I understand the, really it comes down to the deceptive intent. Like, was it Bernie Madoff? He never intended to provide any value for anybody. But the only way for anyone to be able to demonstrate that they were injured, right? That they, you could actually go to court and prove, hey, I lost money because of this, would be if Bitcoin went down and stayed down. And if that happens, we're all fucked anyway. So that's the way I look at it from a ethical perspective. I may be completely wrong about the legal perspective, because whatever it says in the letter of the law, somebody might be able to twist that into some kind of case that they can make stick. I don't really know, but I don't know if my audio just went crazy. For some reason, my Bluetooth keeps disconnecting and then immediately reconnecting. Kind of a pain in the ass. But yeah, so that's kind of my thoughts on it. And we had so much to talk about during the whole 2 hours last night that I didn't want to push the conversation in the direction of the stuff that I had prepared. There was a lot of good stuff that we ended up covering to begin with. I see Logpilot in the chat. Let's see. Den told me you're talking about my post. Wow, so you can't do anything on the down low these days. So yeah, you know what? Maybe I've never really done an interview on this show, but maybe I should start doing some interviews. It seems to be working out for Tim. Oh, cool. Answering it. That's awesome. So the fucking internet is awesome. Like, we're getting real-time feedback. Shit is wild. I love the age that I'm living in. You know what? That Oh my god, are you fucking kidding me? So I played no music. This is crazy. So I get into this rhythm of, okay, I test it, everything works. I test it, everything works. I test it, everything works. So then I'm like, okay, I've done enough trust or don't trust verify. So now I can just go live. And I was playing the music. I can hear it in my ears, and I'm sharing the screen with audio, and then you guys can't hear the fucking music. So I actually played Liar by Henry Rollins Band. And so when Dudeface put up the devil horns, I thought we were jamming. So nobody could hear music. What's up, Danimal? That pisses me the fuck off. What's up, Dana? Making my son listen to you today while I drive him to school. Well, I can't guarantee that it will be PG rated, PG rated dialogue. I tend to cuss a little bit. They keep me, well, I drop a couple of cuss words on True North too, but I try to keep it very necessary. But on my channel, I kind of let them fly a little bit more often. So I hope he doesn't have sensitive ears. So, Dudeface, people still can't get past the FUD on that Tesla thing. It was agreed to in 2018. I mean, so insane what that Delaware judge did. Yeah. And so I think if you get caught in the wrong court even if it's not a legit case, it sounds like you can get anything. Diluted secretions. Boy. Thanks, Howard, for confirming. But apparently the frickin' desktop audio didn't share. So I got a new computer and I'm still working that shit out. I actually had I had to disable the default sound. I guess there's sound that can pump through these monitors somehow, or maybe there's an input output. So I thought I had all that worked out. Okay, so Logpilot is a lawyer, but not specifically securities. So not legal opinion. Yeah, not legal advice. NFA, NLA, all the above. I'm probably gonna have to get a new mouse too, because even though I'm single clicking, it's like double clicking, and so it gets me in a little bit of trouble. What's up, Grit? He's 13. Yeah, he's good to go by now. We'd probably all blush if we anonymously listened in on a group of 13-year-olds' conversations. Probably scare us to half to death. So anyway, yeah, I mean, all of this talk is good stuff, and that's kind of my take on it. But clearly, the lawyers are going to have a better handle on the situation. So, not saying that they can't or won't get sued, and probably is very likely that they would. I mean, especially if these conversations are already happening. But I would almost argue that if they didn't do it, shareholders would have more of a case to sue than if they did do it. Because if you can generate shareholder value by, doing a stock buyback and increasing the Bitcoin per share, because the value of the common is below 1 MNAV, it almost seems like if they didn't buy back the shares, they'd be opening themselves up for a lawsuit by not kind of like doing a no-brainer, this adds value to the system kind of thing. So let me know if I'm off base around that too. Okay, so let's try to find it. Okay, so you responded to Preston. Let's see if it's here. Wouldn't be 42 minutes. Is it 42 minutes ago? Is it this one? Let's see. Preston said, I think they could open themselves up to legal scrutiny if they did that, because intent would be how it's judged, which goes to my comment above. They need to just stay away from buying back common, especially when below 1 MNAV. Okay, cool. So this is it. And then Log says, I don't think buybacks are the real issue. The solution is simpler. Strategy can and should periodically sell small marginal amounts of Bitcoin, recognize the gain, pay the tax, and earmark those proceeds for dividends. That creates genuine realized cash flow. Once they show that, the Ponzi optics disappear, legal risk drops, and management regains full flexibility to use equity preferred as financial engineering tools rather than as the only funding source. They boxed themselves in with the earnings call guidance, and when they realized it, they changed course. The same logic applies here. They're boxed in by the never sell your Bitcoin mantra and may ultimately need to free themselves from it. Yeah, I like this because I've also I'm also not a fan of the never sell your Bitcoin mantra. I'm more of a circular economy, media of exchange, unit of account kind of person. And like, even I think it would have been really great optics if they had bought pizza on pizza day with Bitcoin, right? Just load up your Strike app, pay for that shit with Lightning or something. And that would have been really cool. And so it's kind of funny because exactly what you're describing is kind of like a distinction without a difference from selling the preferred ATM to buy strategy shares back, right? Because if you're raising capital, you have a choice. You can either buy Bitcoin with it and then spend the Bitcoin on something else, or you could just buy the strategy back. But yeah, it probably makes sense that they will have to do something like what you described, even though it works out to about the same thing in the end. You get to the end, but you sanitize the transaction with what you described. So the end is the same, but you sanitize it for the to make the 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 lawyers happy. Um, yeah, I like where you're going with that. And yeah, if they siloed it, if they just like said, "Hey, we're going to silo a little bit of Bitcoin for this purpose," then I think maybe they could kind of distance themselves from the never sell your Bitcoin refrain that they keep repeating. It's like, hey, look, we got some we got some legal shit that we gotta plan for and kind of like get ahead of it. And I think they could probably do this, but I wouldn't mind if they just honestly, right, in a hyper Bitcoinized world, everyone will be spending Bitcoin if we ever get there. So people will be paying their employees in Bitcoin. People will be buying shares of companies with their Bitcoin. Like, everybody's just going to be spending Bitcoin, and the whole world will be a better place. So I don't mind if they ever said, "Hey, look, we want to transition the world to um, Bitcoin 24/7 all the time, forever, and we're going to pivot to a spend and replace Bitcoin model." And I'd really like to see some companies, some BTC TCs spring up with a spend and replace mindset. And if I get a chance, I'll probably bring this up at Tim Kotzman's Unconference in September. I'd really like to see some people with a spend and replace Bitcoin mentality. Some companies, excuse me, like the speculative attack model is great. It's probably it's going to be, long term, produce tons and tons of gains. But I really like Bitcoin being that medium of exchange. So hopefully they will follow some kind of plan, like maybe even something that you just described, to as a workaround, I guess, just to make sure that they absolve themselves from from liability. I mean, I don't care which way they do it, but if one keeps them out of court, then maybe I hope they take your advice. Yeah, yeah, I really like it. What's up, Buffalo? What's up, Owl? Grit says, I'm of the opinion if they didn't course correct, that's also grounds for a lawsuit. Buybacks are not the issue. Let's see. I know you probably have already talked about this, but what are your thoughts on Metaplanet? So I really like Metaplanet, right? Dylan is like has tons and tons of Bitcoiner OG street cred. Um, one of one of our friends on X actually said that Dylan saved him from losing tons of money. I think it was Celsius. It was one of those ones that where you could stake your Bitcoin, I think, and get yield. And Dylan was sounding the alarm bells, like, hey, these guys are up to something, and you might want to get your Bitcoin off of their site before you get wrecked. So um, Dylan has been a very good actor in the space for quite some time. He is executing extremely well. And um, I personally haven't taken a position, not because I don't think they're not worth taking a position, but like until a stock is extremely convenient for me to trade, it's kind of a burden. And so if I can't trade options on Robinhood or on Tasty Trade, where I do most of my stuff, I think I have a Fidelity account that I opened up 4 years ago and has $50 in it or something. But if I can't just do what I know how to do, and if there's not a liquid options market, then I just don't bother. Um, be, because of the inconvenience. Like maybe I could put a bunch of money in it and it makes a bunch of money, but I also have to guard my time. And there's a concept called pruning. I think it was a book that I actually read, and it was for creatives, but it applies to everyone in all walks of life. So you've got your personal life, um, you got your professional life, and then was there a third part? Anyway, doesn't really matter. But if you are spending too much time on your personal life, then your professional life can suffer. Maybe your artistic or your creative life can suffer. And the opposite is also true. You can work too much and then, you don't get to hang out with friends or family or whatever. And so all areas of your life require pruning. And at some point, you might have to cut a couple of friends out, or, like, okay, well, I'm not going to come see you once a week. I might have to come see you once a month. Um, and the same thing happens with positions. And I might need to hit the pruning phase sometime soon, because this is the 5K account challenge, and there's way too many positions in here, right? This is, there's the mining stocks that I'm running the wheel. Okay, fine. Jeff got hired by Strive. Okay, that I'm like, oh, cool. Maybe I'll just take a little small Strive position as like a token of like a tip of the cap, right? Um, but now that's another ticker that I have to pay attention, and another position that I have to pay attention to. Then I'm like, okay, I thought it would be cool to do a poor man's covered call in IBIT. Maybe IBIT options would be fun to do. And okay, here's my strategy 1080s, and here's um, okay, here let's do a debit spread for the videos. Here's a riot call that I copy traded with some friends of mine. Um, oh, what about Tesla? Well, maybe I'll take a flyer on a Tesla position. And so I've noticed that a lot of the mistakes that I make when I'm trading is not because of a failure in the strategy itself, but it's in executing it, because I start to accumulate too many positions, right? Become like a position hoarder. Like, oh, well, what about this company? And what about that company? And what about this company? And you just it's just too much, right? There's too many expiration dates to keep track of. I got weeklies. I got 45 DTEs, but these expire on the 12th. I got these 45 DTEs, they expire on the 19th. I got these 45 DTEs, they expire on the 26th. And so it's too late to make a long story short, but I don't need to hold a position in every company that I love. And so I love Metaplanet, I love Dylan, I love everything that he's doing. But for me, until they have a convenient place for me to trade it, they have a liquid options market, I just can't squeeze it into my portfolio. Like I've got a bunch of shit that I need to cut out, let alone add one more thing in. So that's my story and I'm sticking to it. Buffalo says, but if you're buying Bitcoin every week, why would you sell Bitcoin? Just buy a little less. Um, why would you sell your Bitcoin? Just buy a little less. Yeah, it kind of just doesn't matter, right? If you've got some fiat dollars, you can either spend them without going through the Bitcoin purchase, or I think doesn't Strike have a thing where it converts? Can't you just treat it like a checking account? It converts everything to Bitcoin, and you can just spend it out of your Bitcoin account. Anyway, I think that's where it's kind of all headed. That hug is coming for you. Don't threaten me with a good time. Let's see. Maybe it's easier to go the other way. Say a Steak and Shake or a Tesla moving towards a treasury model, as well as accepting payment. Of course, strategy could build a pay in Bitcoin model. Yeah, I see. I see what you're saying. Dr. Van says Dylan saved me from losing some money on FTX. Okay, he was the first to point out their balance sheet was a scam. Good shit. Thanks for sharing that. Strategy could also start a Lightning node and help to bring DC area further for Bitcoin transactions. Not sure if it's called a Lightning node or a network hub. Log says, problem is that you just cannot be using new equity inflows to fund obligations owed to older equity investors. Common ATM, when it's accretive, is okay. It's got sort of bad optics, but it's fine. See, but when you're selling preferred shares to fund obligations owed on older preferred shares, that's just a no-no. Yeah, what about the timing? Because or what if they set up separate accounts? I know you were saying they could silo the Bitcoin, but what if they paid what if they paid the STRD dividend from the business intelligence money? Like it almost oh god, I hate the way that it sounds. It almost sounds like money laundering, because it's like, okay, I've got money in this bucket and I've got money in that bucket, and I'm going to use this money in this bucket to stay out of jail. But like, if a company just put all their money in the same bucket, then it ends up amounting to the same thing, but you don't get that plausible deniability of saying, well, I didn't use my left hand to pay the right hand, and then the right hand to pay the left hand. So where I was going with that is STRD dividends are monthly, right? No, STRCs are monthly. STRDs are still quarterly. So is there a is there an amount of time that you would be able to distance yourself from, like, a month and a half goes by between, MNAV dips below 1 briefly. They paid out the STR dividend 6 weeks ago, and it's like 6 more weeks until they have to pay it out again. So they sell some STRD ATM, and then strategy goes back above 1 MNAV. Yeah, I don't know. I'm trying to work through it and see if because at some point there has to be some kind of distancing, because if you sold STRD ATM in 2026, right? Let's say we have a bear market, and then you use the common. Well, I guess we're always selling the common to pay the dividends, right? Isn't 100% of the dividends for the commons going to be, yeah. So anyway, I think I'm just kind of rambling now. Let me know if you can figure out where I'm going with that. Let's see. There's a Bitcoin treasury company I heard about on Tim's channel. They run a node and harvest transaction fees with their Bitcoin Lightning Network. That's badass. Alaric says, do you have any ideas for some stocks that are highly uncorrelated to Bitcoin and strategy that make sense? So the only other stock that I hold in size and will continue to own in size is Tesla. And so this is just my personal opinion, but Tesla is technically a Bitcoin treasury, not a leveraged Bitcoin treasury company, but they hold Bitcoin in the balance sheet. Now, Mason is critical of them because they have only ever sold Bitcoin since they bought it. But if we're, as I previously discussed, I really don't care if someone buys and sells Bitcoin. That's really not a big deal to me. And to a certain extent, it would be kind of cool if companies put themselves on, instead of like a fiscal year cycle, like a 4-year Bitcoin cycle, assuming that they continue. Bitcoin goes up. You've been stacking sats for 2.5 years during the bear market. Okay, now it's time to sell your Bitcoin and build your factory, or stake the Bitcoin, get some yield on it, whatever. You're putting your Bitcoin at risk. You can do the spend and replace model, or you can just stake the Bitcoin, borrow against it, and maybe use that money to build your factory. However you want to do it, whatever makes the most tax sense, all that bullshit. So yeah, anyway, it would be cool if some companies could just get on a little bit of a more of a low time preference mindset. So hopefully that's where companies are going. And so there's a guy that I follow every day called Stephen Mark Ryan. He's on X and YouTube, and his channel's called Solving the Money Problem, and that's where I go for all my Tesla hype. And my prediction is that in 10 years, Tesla and Strategy will be the Magnificent Two. They will be the number 1 and number 2 companies in the S&P 500. And Tesla's money, their margins that they make on electric vehicles are like industry leading throughout the world, right? They've got the best selling car, even though the Model Y is pretty damn expensive. Like all of the other former number 1 car sales in the world were all like little cheapy models, 20 grand. And so Cyber Taxi is going to make their electric vehicle sales look like a rounding error. There's a guy named Dan Pena, who's got a really good series about S-curve adoption, and there are, I think he talked about 6 different industries that are going to be severely disrupted, and energy is definitely going to be one of them. Obviously, AI, and Tesla is going to print an absolute shit ton of money with cybertaxi. Uber and Lyft are fucked. All of the gas car manufacturers are fucked. And all said and done, there might be 1 or 2 gas car companies that survive temporarily, but it's going to be Tesla and the Chinese car makers. This is just my personal opinion. And mostly I'm parroting things that I've heard Stephen Mark Ryan say and that I agree with. And then beyond that, the opportunity for Optimus robots in the future will make, he likes to say that that will also make their cyber taxi profits look like a rounding error. And so to a certain extent, Tesla, you would think it would be positively correlated to Bitcoin because they hold some Bitcoin, but it's kind of like it's secondary to what they actually do, which is make service, provide products and services. So for me personally, if and hopefully when we get this next Bitcoin pump, maybe September, October, November, December, January, whatever the hell it is, I will probably exit. Well, I will certainly exit all of my strategy leverage, right? I don't mind holding some shares through a bear market, but I cannot justify diamond handsing a leveraged Bitcoin play in a potential bear market. Wait, where's my MSTR or my Tesla position? Yeah, here it is in the IRA. I've already taken a smallish position in Tesla in my IRA, and I will be rebalancing this after the next Bitcoin pump. So fingers crossed that the Bitcoin bull cycle is not done and we'll get to 150, 200, 444 would be nice. But if all of that happens, then I will be rebalancing into a significant Tesla position. I don't know if it's going to be 50-50, 60-40, 70-30, 30-70. We'll see. Once the dust settles, that's my plan. And if the market gods decide to smile on me, then Tesla will ramp up their cyber taxi through the Bitcoin bear market and give me some alpha psycho disco beta through the bear market. And then if Bitcoin goes up to 200 and drops back down to 100, 2026, 2027, maybe I will trim my Tesla position and load up on strategy again. That's my basic plan for the next, I don't know, 10, 20 years. Let's see. Yes, if they had profits from the operations, be it business intel or sales of Bitcoin, it cleans everything up. Okay, cool. And so, yeah, it kind of sucks that they have to jump through these types of hoops. But it's really good that people like you are talking about it, Log, and hopefully they're listening and they can keep themselves out of hot water. This is confusing, and I am just playing it out. I don't know for sure on any of this. I don't think it's a timing question. It's the source of the funds. This is why I really like the idea of some profits from somewhere that get earmarked for dividend servicing. Yeah, it seems like a simple thing, and if you just do it, it it just takes the the litigation bears out of the equation. If preferred, what? I don't know. Those comments from 7 minutes ago, so I don't remember what the hell I was talking about 7 minutes before. Angry Buddha says, I've been narrowing my focus as well. Arbing a basket against IBIT. That basket grew more than it needed to. Let's see. Ethics of the future. If preferred shares are considered leverage. If preferred shares are considered leverage. Okay, I think so. And you use them to buy back. Isn't that what a lot of companies do? Use leverage to buy back shares? Yeah. Yeah, I think you're right. Because, yeah, companies will just borrow money if they think their stock is undervalued. And who was it? I think it was somebody told a story about it was Steve Jobs, and it was either Buffett or the other fiat scumbag Munger, and they were saying, like, Apple wasn't sure if they wanted to do stock buybacks or something, and they asked him, well, do you think your company's undervalued? And Jobs was like, yeah. And they're like, well, okay, well, buy your shares back. Like, if you think that your stock is undervalued, buy it, and if that shit goes up in the future, then you bet on the right horse, I guess. So yeah, I agree with you. My mental frameworks, it just makes complete sense, but the law doesn't necessarily make sense. I can't remember which podcast I was listening to, but they actually made the claim that it might be a company's fiduciary responsibility to exit Delaware for a better legal environment. If companies are going to, or excuse me, if the law is basically going to be weaponized against people like Elon Musk, companies incorporated in Delaware because of the favorable legal system. And if that is no longer the case, then it might be companies' responsibility to exit Delaware to begin with. So Delaware might have fucked around and found out, because it's going to be hard to fund public schools if all of these billion-dollar companies exit the state for greener pastures. Angry says, when market caps are 5 trillion, Tesla will be one of those companies for sure. I'm betting on it. Let's see. Running a Lightning network is a way to loan out the Bitcoin without loaning out the Bitcoin, in a way. I'm sure there are trade-offs. Still, I like when strategy innovates, even when it doesn't go perfect. Let's see. No, but I think it's true that strategy could issue convertible bonds or something to fund the buyback. That is another. Yeah, that would be hard for them to get a convertible bond deal, though, if they were in that much trouble, if they were in that much distress. But let's see, we're in the weeds, and I don't know for sure about any of this, but in the scenario, they would be taking on debt at a time that the company is seriously struggling. Seems like a really bad state of affairs if stuff comes to this. Why not just sell 40 Bitcoins per month while buying thousands per week? Yeah, when you put it that way, yeah, you're buying 1,000 Bitcoin and then you sell 40 to pay the preferreds. That's another distinction without a difference. Like, but man, after saying never sell your Bitcoin so many times, God, the community would just be savage. But then maybe we'll have our little podcast and we'll shout down the annoying koalas. Let's see, Dude Face just sold a 340 for next week on strategy. I don't expect any face rippers for now, but if we get one, I'm happy to roll out farther to take more premium. Yeah, and I think that's kind of why I think making the guidance public was a mistake, because to a certain extent, you can just roll until MNAV you can just roll until MNAV rips, and then just wait for MNAV to compress back down to, to 2 or something. In the covered call community, we have a saying called roll until you're right. And knowing that there's always going to be some kind of correction just gives me so much more confidence in my covered calls. I was glad that they came out with the revision because it introduced a little bit more of chaos. Like I should be worried about my covered calls, and I should be worried about my long calls equally. I shouldn't be like, okay, this guidance makes me feel better about one side than the other. I like the revision because I think it has less barriers to true price discovery, whereas the guidance was kind of like, it just makes it too easy to short the stock. Yeah, so what do I have on in this account? I think I still have on 2 weeklies. Yeah, I might have to roll my 360s down. You rolled yours to 340. Yeah, that's pretty aggressive, but might be worth it. Somebody just published a screenshot of the Bitcoin seasonality. August was flat, and September was a fucking shit show. But I mean, last September we were in the beginning of the bull market. Or not beginning, but the beginning of the middle, maybe, or the middle of the beginning, the end of the beginning, whatever. So last September was actually decent. Last September was up 10 grand. So I don't know if that's just an average. That seasonality shit can't be completely accurate because the seasonality of a bear market can't be the same as the seasonality of the bull market. Maybe we need 2 charts. The bear seasonality chart and the bull seasonality chart, because they can't be identical. And I guess they could. But it just, so last year, yeah, we started to get the pump, basically right after Labor Day. Not to say that the exact same thing will happen this time. The market likes to give you the old okey doke. So if you expect this year to be just like last year, it's not necessarily that it'll be the opposite, but maybe we don't get this pump until October, and we don't get this pump until December or January, assuming that we get one at all. But yeah, I would love if we got a nice September rip. But anyway, this guy posted the seasonality chart, and supposedly September was a train wreck for Bitcoin. What's up, Kanal? Pair trading strategy in Tesla is pretty much what I do. I got the idea from James at Invest Answers. Okay. All right, later, log. Got to bounce. Thanks for engaging with this stuff. Some of our True North friends have branded me a FUD spreading bear tard for raising the questions. I remain super long strategy. The rest of my now in the money calls are falling into long-term cap gains in 3 to 4 weeks. I've hodled everything, love the company, want it to thrive. Oh, wow. So you timed it very well, because if you're in long-term cap gains, then you can exit that leverage and only pay 20%. Strong work. Ethics says, doesn't bother me if they sell some Bitcoin or do Bitcoin dividends, but I haven't heard anyone explain why using preferred shares leverage would be considered a Ponzi. Seems to me star. Little retard. Isn't strategy running the ATM under 2.5 MNAV the comply themselves shorting the stock versus saying they won't under 2.5 trying to raise the price? I'm about to read this again. Running the ATM under 2.5 versus saying they won't under 2.5. You might have to clarify that. I'm not catching on. I'm not smelling what you're stepping in. Seems to me strategy is doing the buy, borrow, die method just on a corporate scale. Yeah, that sounds about right. Dude face log pilot, appreciate you. Gonna follow. Keep it real, sir. Yeah, thanks for joining in. All right, so let's see if I actually need to make any trades today. We've been flapping our gums for quite a while. All right, so if strategy continues to tank, I will peel off some more of these shares and add more long positions. But I mean, I hope 336 is the bottom. There was resistance for 340 a while back, so maybe 336. If we hold tight to that, maybe we'll be okay. But otherwise, if we can't hold on to this, it's probably going to 300, or we might even see 250 again before we get the rocket ship. So if that guy's seasonality chart rears its ugly head and September's a red month, yeah, it's 250 all over again. And so I don't really want to go below a core position of about 1,000 shares. Now I do have like 400 shares in another account, so I could sell up to maybe 700-800 more shares and still have my core position of 1,000. But I don't want to just do that now, right? If this is the bottom, when we go back to 400 quickly, that will be perfectly fine. No problem with that. And if that's the case, then I would just, like if my 400 strike calls get wrecked, I would just close those positions with the longs and then rotate back into shares. All right, but with that being said, I've only had these on for 2 days, so they're still worth 75% of what I sold them for, so really nothing to see there. Oh, but one thing, okay, so this is interesting. I did not notice this though. So I reduced my my share count by 100, but I didn't take off one of the covered calls. So you could argue that I'm naked. I have a naked call on. Because I don't have 100 shares for each covered call, and all 6 of my longs are covered here. However, if you look at the net delta on my longs, this would be some kind of weird like ratio spread or something, but I could technically sell 3 to 4 covered calls against these positions as well without too much trouble. Really, even just these 530s, I could get away with selling some covered calls against, but it would be like well above this 395 strike. So I think to clean this up, I'm just going to close this position. Just one. So I sold it for 8. I'll buy it back for 6. I'll keep the $200, and then I'll just make sure that I don't have any irresponsibly short positions on. Oh, I actually got to put this the other way. It's a debit, not a credit. All right, that's cleaned up. So I've got 1,300 shares. I've got 13 covered calls and 6 covered calls against 6 leaps positions. I would have been fine leaving that on because I have so much delta here, but just for good housekeeping, I think I'll keep these 1-to-1. Same deal here. These are not ready to roll, so we'll keep it moving. All right, is Tesla taking a dump as well? I might have to roll these. Yep. So I've had this position on for 28 days. That's definitely a lot longer than I normally would keep it on. But Tesla must be down a little bit. So these are ready to roll. So I will roll out to 43 days to expiration. That's as close as I can get to 45. And I'm just going to go right here to the expected move and see if I can get a fill at the mid price. Sweet. So that put a couple of bucks into the buying power column. And let's see. Let's ungroup and regroup. Now, I did that pretty quick. I really should have double checked to make sure that this was a safe I formed up this Poorman's covered call safely. Generally, the expected move is probably fine. But to get yourself into the ballpark, if you take the strike of the long call, add it to its value, that would be 360. And that's the exact strike that I picked. Technically, you could add the price of this covered call to actually subtract it from that number. So I probably could have sold the 355 if I wanted to be a little bit greedier. But this is actually fine. But I really should have checked that. I did that so quickly. I really should have checked that before I hit submit. So those are the Poorman's covered calls. This one, I might as well just go ahead and roll as well. This one is against shares. But like 650 is basically 50% of 1350. Pretty close. So this is also ready to roll, even though it's only been open for 13 days. So same deal. I'm going to roll it to 43. And just to make sure that it doesn't overlap the other one, I'll just roll it to the 365 strike. Oh, but that's only a credit of, it's only for a credit of 72. Let me see. Is that even worth my time? Interesting. So maybe I roll it a little bit more aggressively then. There we go. Of course it don't fill. All right, so this is the IRA. That gives me 2,200. So there's no margin in this account. It's not even possible. And so I'm gonna execute a little bit of what I was talking about as far as the pairs trade. So I just took profits in my Tesla position, right? So I need to redeploy that $2,000 of capital. But I think that strategy is more undervalued than the Tesla is. If we get a nice pump in Bitcoin, then we can get one last gasp of strategy money. But $2,000, what can I do with $2,000? Okay, I've got 7 covered calls, 4 Poorman's covered calls, and 300 shares, and a boatload of January 1080s. For these to hit, they have to hit by October 16th, because that's when these would be 90 days to expiration, and I would be basically ready to roll them or close them out, win or lose. So maybe I'll just dollar cost average into these. What can I get? 10 of them? Almost. 9. So 9 Januaries. All right, cool. Took some profits in Tesla, bought some strategy positions because I think strategy is more undervalued than Tesla is at this stage of the bull market. Or I'm using Tesla to fund my strategy addiction, however you want to look at it. These are not ready to roll. They've only been on for 2 days, and strategy hasn't really crashed enough to make these rollable. Okay, not ready to roll. These are ready to roll. So I've only had these on for 2 days. They're worth almost nothing, right? I could hold these for one more day and collect $40, but let's go ahead and just close them out. Sold them for 2 something, bought them back for 40. And now I got some decisions to make because I'm definitely going to put 2 back on. And I was trying to hold the other 2 to see if we get a bounce. So let me just take a look at the chart. So yeah, so we're under. Unfortunately, sometimes a lot of traders are looking at all this technical analysis shit. So when you're above the 200, there are traders looking at that and thinking, oh, maybe this is the bottom. So sometimes the 200 can buoy the stock price because people will be bidding it up from here. But now that we're below it, now the 200 traders are looking at it, and the 200 is a barrier. So now we got to pump back above the 200. So that's kind of annoying. Yeah. So maybe I'll try to do a reverse jinx, and I'll just put all 4 of these covered calls back on, and I'll try to get whipsawed, and maybe we'll jinx the market into roaring back to life. So just for tomorrow, and this is crazy. So implied vol is pretty low. IV rank is 18. So you would think, oh, okay, this is not really a good environment to capture premium in. But if I wanted to just sacrifice all of my upside, I could actually get $450 for one trading day between now and tomorrow. And a lot of times there's a lot of premium baked in the last 24 hours. Like this can be the same premium in the last 24 hours that you can see in like Monday through Thursday. So this is kind of a normal phenomenon. But the point still stands, right? I could collect more than 1% return on capital in a single trading day. It's almost, there's only 2 hours left in the market. So 8 hours tomorrow and 2 hours today. That's 1% returns in one trading day. There's 52 weeks in a year. So if I did this every week, I could get 1% a week, but only be exposed to 52 days of risk. I'm not saying that's an optimal strategy. I'm just saying if I prorated this out for a 5-day week, that would be like 5% return on capital for the week. So I'm just going to do the 340. Collect $1,400. And in this account, I thought I had made a withdrawal. That's going to pump my net theta up extremely positive because it's so close to expiration. There's a lot of theta baked into this position. But this could go very against me. There's a possibility that this could go really wrong if we come back roaring back to life overnight. However, I will continue to do what I've been doing, and I will plow that $1,200 back into long call positions. And since I'm on January, what did I say that was? $1,400. So that would give me like 7 of these. No, too much. Let's do 6. Yeah, it's saying the settled cash balance is $3,000 and the cash is 29. I don't know if that's what the real number is. So we'll just assume that I spent all my dry powder. All right, fingers crossed these get blowed out, and I have to take off some of these leverage positions to pay for it. That would be fine. Looks like I'm clinging on to the tiniest shred of hope for my December 1080s, but already kind of like buying some Januaries. I think even Februaries. I might have already bought some Februaries. All right, the 5K account, nothing to do with these but wait. I guess these 10.5 calls, there's only 2 cents left on them, but I sold them for 10 anyway. I could probably just wait till tomorrow and only pay a penny to roll them instead of 2. Let's see what it costs me to roll to next week now. I could roll to the 10 strike for 15 and just get it over with. Sure. And they're going to milk me for another penny. Of course they will. There we go. All right, get that out of the way today. That leaves the $9 put for tomorrow. This should, well, unless CLSK crashes another 25 cents, this will expire worthless and I can just roll it tomorrow. Yeah, I sold it for 8. When the hell did I sell this? Yesterday? I sold it last week? Okay. Since CLSK and Riot's prices are crashing, I'm just going to sit on my hands and do nothing and not really roll these until I have to. Or just let them be assigned. I'm probably going to wait for the next Bitcoin pump. Once I get a Bitcoin pump, if all of these Bitcoin treasury companies, if IBIT, if all of these guys pump at the same time, I'll probably use that opportunity to prune these positions. I really got this get this. I have like more positions in this 5K account than I do in some of the bigger accounts with way more money in them. So, I mean, I take some of these positions for the videos just for, entertainment purposes to demonstrate how to do certain things, debit spreads and whatnot. but I also need to demonstrate good housekeeping. So I'll go ahead and hold on to these until we get a nice run, and then I'll clean house. Only $360 of buying power here. Not terribly motivated to spend it. That's not really much to speak of. It's also nice to keep a little bit of money in the account to be able to pay to roll things. So I think we're done. We'll check the chats and then call it a day. All right, Canal says, any reason you don't run further out of the money cash secured puts, basically doing a strangle approach? Yeah, I'm usually just very aggressive with the cash secured puts because I don't mind being assigned the shares. And so I'd usually just try to just choose the strike that's right below at the money and cram as much premium as I can possibly get into that. But that's actually what you're suggesting. That's actually what I did in CLSK and Riot. When I sold these on 7/31, CLSK was probably $12 a share. Yeah, $11.50. And so I sold the $10 strike, which was $1.50 out of the money, and probably would have done better to sell it even farther out of the money. But we had also been riding the wave up. So we were selling 20% out of the money on the way up, and now we're kind of like stuck in the correction mode. But yeah, that's pretty much what is happening here. So I'm selling the $9 puts and I'm selling the $10 calls. So that's only a $1 wide strangle, I guess, if you combined these two. Selling the 9 put and selling the 10 calls is a very tight strangle. So it's, yeah, so in a sense, that strangle is basically running both sides of the wheel at the same time. So yeah, nothing wrong with it. Maybe he meant confuse the shorts. Yeah, talking about that 2.5 guidance. Strategy should just say for regulatory reasons they have to sell a small amount forced hand. Yeah, that's a good get out of jail free card, Andre. It's like, look, never sell your Bitcoin. However, we also don't want to get sued. So we're going to buy it, silo it, keep it in the, we'll have our never sell your Bitcoin bucket, and we'll have our, in case of emergency, break glass Bitcoin. Yeah, they could get around it. There's enough of us Sailor D-riders out here that we'll just let them get away with anything. So the bears are going to scream no matter what they do, and the cultists are going to love him no matter what. So they could absolutely do it. Danimo bought a 300 call Tesla December 2027 using the strategy shares I sold at 350. Cool. Good luck with that call. We will both do well if that prints. Stin Vaughn. But the question is, do they have to do anything like that? We are just assuming the thesis is proven. Well, they may not have to, but the people who already bought above Strategy's cost basis right now are already fucking pissed off. So the people who get, if they endure 50%, 75% drawdowns over the next 2 years in a bear market, they're going to be looking for somebody to blame than themselves. So I guess it's a matter of Like, I think Jeff posted that that setting aside some of that Bitcoin would be inefficient and unnecessary, something like that. I might be misquoting him a little bit, but I think it's pretty close to accurate. And I agree. However, is it worth a little bit of inefficiency to avoid a lawsuit? Maybe. D-Rider for life. Unless he, exactly. Unless he buys Ethereum. That's a red flag for sure. Victor, why not just keep 2.4 billion of cash on hand to be able to pay 4 years of dividends? Yeah, it means 20K less Bitcoin, but it would provide for one full Bitcoin cycle worth of peace of mind. I think it would be harder for them to justify holding a melting ice cube than it would be selling the Bitcoin. But yeah, it's possible. It's a reasonable suggestion. All right, we're all caught up on the chats. I appreciate everybody tuning in.